So PepsiCo delivered a refreshing earnings upbeat even as the U.S. demand softened. The company topped Wall Street estimates in Q2, posting earnings per share of $2.12 versus $2.03 as forecasted. Question is, can PepsiCo's global strength offset its domestic headwinds? Now, this is the monthly chart, and I was looking at this rally, basin candle, and rally. This zone is a little bit off, so let's readjust that. Okay. And we're going to adjust that to 129. All right, so let's review the zone a bit more in detail. So you have this rally, which is an extended range green candle. You have a basin candle, and then you have the rally out of this zone. So this doji candle, which is a hammock candle, which a long wick on the bottom of the body, is telling you that the unfilled buy orders are in this lower portion of the region. So if we just kind of quantify that and we adjust the bottom portion of the zone, and if we then zoom out, we will see exactly where price came back to the zone. Gave you two opportunities to get long back in May and then June before prices moved higher. Now this was on earnings. However, if you follow the footprints of the smart money on the charts, it would have told you that this was the opportunity to load up. Let's zoom down to the weekly chart. Now if you say, well, I don't want to take the zone blindly, I want to see some type of reversal. Well, you have price making lower lows and lower highs until these basin candles occur, and that's when price started making higher lows. So that could have been your opportunity to get long. One thing to point out on this earnings call, if you want to be ultra conservative, you wait for the price to pull back before going long. That's only if there's any remaining unfilled weekly buy orders. We'll call that 134. All right, now let's take it down to the daily chart. But before we do that, this becomes your target. I'm going to call that 162, which is roughly 20 points away, $20 away. All right, we want to look at this area here though. All right. So for you ICT traders out there, this price was making lower lows and lower highs. You have this fair value gap. And as price breaches and closes above, that could have been your opportunity to go long. You also have this liquidity grab. And as price was breaking out of this fair value gap, inverted fair value gap, that could have been your opportunity to go long. Conservatively, as price broke it, could have waited for a pullback. Assume this is a gap higher. So now you have a, let's put this in aqua. As price broke this, comes back, could have went long on this green candle. So there's multiple ways to get in if you didn't want to take that monthly buy level blindly. Bigger the levels, the higher probability that they're going to hold. Again, you have a sell-off after earnings. You have some local dynamic resistance at about that 148. That's where the 200-day moving average sits. Let's zoom back out to the weekly chart. Again, should have went long as the chart suggested, down at sub 130. Look for price to move higher. Look for some first target at 148, second target at 162.